All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And did you guys see Baba today? Oh man, it was amazing. We're gonna look at the chart analysis real quick, and we're gonna talk about how Dylan and I are playing this whole like Baba kind of bottom question mark. Maybe we'll see. I don't know.
If you like this kind of entertaining stock market content, we're just two stupid guys trying to figure everything out and also making bank on Baba. So give us a like and subscribe below.
All right, we'll get to it.
Two Stupid Guys Trade Stocks.
All right. So you want to walk through the chart?
Oh, yeah. All right. So this is going to be super important. We actually did a video on how to read these charts. But basically, this is called a hammer. And this is called high mega volume, right? 90 million shares. Yeah. That is way more than their average, which was at the time less than half.
Wow, that's impressive.
Wait, so that's good.
Well, like, what does this mean to like people? You know, like, why does it matter? I will link the video above, but like, why does this matter?
Why does this matter? Why does a high volume hammer matters? It means it's hammer time. All right.
I love it.
It means it's time to get in that because that's called forming a bottom. Now, this could be very temporary. This could still go down. No one knows the future in stocks. But for instance, we're going to go over our positions and how we did fairly well in this. I entered my positions actually at the end of the day when I noticed that this formed a high volume hammer just because I knew it was going to go up right after. Right?
Yeah, exactly.
So that's how you take advantage of this. We'll link the video on how to read this stuff. But to me, very bullish sign, high volume rejection on the hammer. Boom.
Yeah, exactly. So we know basically that, like, you know, people are now stepping into the market and saying, you know what, this is a ridiculous deal. Like, I am getting like loading up the truck, just like grabbing a shovel and just like pushing on the bob in. You can afford basically, right?
Yeah, pretty much. And you know, sometimes what happens on these is that it'll actually come all the way back down to the low of the hammer over the next couple of days. And then if it's going down on low volume and then we come back up on high volume, that's called a double bottom. It's a very, very popular chart analysis strategy, but it usually starts with a first double. So it doesn't mean we're going to automatically V up all the way from here, just like COVID. But yeah, it's a very, very good sign, and obviously we both had a very good day today because of it.
Exactly, yeah. So we're going to talk about a couple different ways that Dylan and I are both playing this whole thing, because there's many ways to play like a movement or hopefully a trend up like this.
Right. So these are mine. I think I put mine first. Sorry.
It's all good.
So basically, this is just in case people don't know, a covered put, which I have had Vinny explain to me a million times. And this is the way that I understand it: is I put up my unused cash, my brokerage account, and I say, give me a premium. And if the stock goes below this price, I'll buy 100 shares worth. If not, I'm keeping the premium. Leave me alone.
Exactly.
Vinny says it in a much more intelligent way.
Yeah.
And then a call option. I'm just betting the stock is going to rebound and we'll take profit depending on the chart analysis.
Exactly.
That one's easy.
Yeah, a couple different ways to do it, right? All right, and this is your actual positions right now, huh?
This is me. So I had entered a 175 call last week when it hit 165. I'm like, man, this is outrageous. Crazy low. It expires December 17th. I made $700 on it today. Was that 750? 650?
Yeah, 750 today, 646 total.
Got it. So that was the call option, but I have a bunch of unused cash and this was not my idea. This was Vinny's idea. So I owe you a beer. I have a bunch of unused cash in my account because I'm a skeptic of the current market. I think it's slightly overvalued. So Vinny's like, hey man, you got a bunch of cash. Why don't you buy a Baba put? Because it's probably going to bottom soon. I was like, okay, I'll just risk $15,000. It's fine.
Yeah, it's fine.
So I put up my 15. I had 30K in free cash. I was not going to use both of those or all 30K because I'm like, this is stupid. Like, I'm not putting all my eggs in one basket. That's not what I do. Spoiler alert, that's what I did.
Yeah, that's exactly what you did.
But the first put I have expiring in 3 days now. That's going to be the one on the far right. Expires August 23rd. I got $342 in premium.
Mm-hmm.
So here's what's happened throughout the day. I'm like, all right, 15K, it's fine. It went down to like 152 at one point, and I was like, Vinny, I'm gonna murder you, right? And I'm like, oh, what a horrible idea this was. Okay. And then, I'm at work, and in between some of the stuff I'm doing, I checked it and I saw the insane volume, right? And it was 30 minutes before it closed. I'm like, this is a hammer. I'm looking at Robinhood, so I can't tell in the daily, but I know what these look like. So I'm like, this is going to be a huge hammer. This is going to rebound. So I bought one like right before it closed.
Yeah.
And it was worth, it's a September 3rd expiration. It gave me another 500. I'm going to say I'm probably going to be fine on that one. So overall, my total intake was 800-ish on the premium, another 750 on my calls. And I actually have another call on a different account. It's only like 200, but $1,800 a day, $1,700 a day.
That's nice. Yeah, I was up probably about $1,000 total today. So I didn't really use a ton of options. I used one options play, but I bought more long shares. Fortunately, Dylan was nice enough to text me when he saw the high volume hammer forming, and it was just like, dude, I think today's the day. So I was like, all right. So I ended up picking up a little more than I planned to.
Wait, you did this because of me?
Yeah, I did. Yeah. Well, part of it. So the top one here, 55 shares, that's in my main account. I've been holding BABA now for a few months, so I've been calling dollar cost averaging down. So I had picked up another 20 shares or so on Monday, which is yesterday. But this other account is actually a IRA my wife had from like an old job that was just kind of sitting there doing nothing. And I started actively managing it in December. I texted Dylan today. After this, as you can see, this is a very concentrated portfolio. This is 100% BABA right now. I
didn't notice that.
But this account is up 55% since December.
Oh, man. Oh, that's good.
Yeah, I've been absolutely crushing it. So the other play is like, we'll link it above, but Dylan and I have been doing this stimulus check challenge thing where we both created new accounts with $1,400. And we try to see who can grow it the most in a year. And so it kind of limited funds in that account, but I wanted to be able to play this a little bit. So what I did is I sold a put spread, a credit put spread, which is like a bullish position on BABA. So basically, as long as Alibaba stays above 170 by Friday, I collect $79 in premium. My max loss on this thing is $79. I'm sorry, max gain is $79. Max loss is $171. So, with all the movement in Alibaba, the implied volatility has been up through the roof. Implied volatility is a way of measuring like how much the stock is expected to move. And, it's not quite at its highest because it's at 44.5 with a percentile rank of 83, meaning it's at about 83rd percentile of where it's been in the last year. So, it's been higher 17% maybe of the time, but it's still pretty high.
83 is still high.
Yeah, it's still high. Ideally, when you're selling options, you'd like the implied volatility to be over 50. 44.5, not quite 50, but yeah, close enough for me. So, like I said, I opened this put credit spread. Basically, I sold put at $170 a share, expiring this Friday, got $2.55. But since there's only a small amount of capital in this account, I need to sell another option against it. Otherwise, it'd be an potential loss of $170,000. I mean, I'm sorry, $17,000, which is way more than the account has. So I had to buy this other option, and for $1.76, I mean, I collected the premium there, $79, max loss of $171. This is from an options calculator. You can punch it in, and it'll tell you basically what your probability of profit is, tell you what your break evens are, all that sort of stuff. It gives you kind of like a daily breakdown of what you can expect in terms of profit. So this has a 65% probability of profit according to them. So pretty nice. I'm risking about 32% of the strike with a 65% probability to profit, which is straight up tasty trade, quality level options trade right there. That kind of fits their rules. So I'm pretty happy with that. Hopefully expires this Friday worthless, and I get to keep the $79.
You did that in your Stim account?
I did that in my Stim account.
I bought it. That other thing that I was talking about where I had it on another, I risked everything I had in the Stim account to get back to break even, and I hit break even today.
Nice. I'm like 1550-ish, somewhere in that ballpark. So like I'm up 10% or so from when we started the challenge.
I could lose it tomorrow or have 5,000. I don't know. The way I'm doing it's crazy.
Same. Yeah, exactly. It's been a real fun ride, but I'm just kind of curious what you guys are thinking. Like, you guys buying more at this point, or are you just kind of happy with what you've accumulated so far, or kind of where everyone's at as far as like Alibaba goes? But I'm pretty excited.
Yeah, I'm pretty stoked. I do think that we gapped up a lot, right? It's going to correct a little bit. I mean, if it goes up, obviously awesome. I don't think it's going to happen, but still a good day.
Yeah, very fun and exciting. Got to watch the Asian markets tonight and see how it reacts over there, and give us a little indicator for tomorrow.
Yeah, I'm seeing a double bottom in the future here.
Yeah, nice. Well, we'll see. You heard it here first, folks. All right, we'll catch you guys in the next one.
Have a good one.